Just like what Albert Einstein said, the hardest thing in the world to understand is the income tax. Literally, yes. In analyzing this topic, we found it difficult to understand, but we tried our best to explain it to you. So, without further ado, let's start our discussion.
But I read that if I start a business, I'll have a lot of responsibilities, like paying tax. I must find out more about tax. Come with me, let's investigate. That was that. They will have to give up. None of them can afford to build the playground.
What do we mean by the word taxation? Paying taxes to governments or officials has been a mainstay of civilization since the ancient times. Based on my own understanding, the word taxation refers to the system of a certain country in which a taxing authority, usually the state or the government, fund their expenditures primarily for the people by compulsory living fees and taxes on individuals and their business entities. Moreover, the sovereign state has the authority to place a monetary obligation to us, and of course to some of our own properties in order to support or meet the government's required expenses and for the public needs by collecting revenues.
Purposes of taxation. Before I discuss the purposes of taxation, let's go back to its definition. Why do we need to collect tax or pay taxes? To raise revenue. Why do we need to raise revenue? To carry out the legitimate objects of the government. And that's what we call the primary purpose. Revenue purpose or fiscal purpose. The primary purpose of taxation on the part of the government is to provide funds. So make sure that we pay taxes so that if something came up, problems, etc., our government can support us. Or property with which to promote the general welfare and the protection of its citizens and to enable it to finance its multifarious activities or program. Example, during the pandemic way back last year 2020, the government gives us financial support or the ayuda. If I'm not mistaken, they give 6,000 pesos to each of the household. So that it is a big help to us during those times that we cannot go outside. The second purpose of taxation is regulatory, sumptuary or compensatory. While the primary purpose of taxation is to raise revenue for the support of the government, taxation is often employed as a device for regulation or control. Why do we need to regulate or control the taxes? It's for the general welfare, reduction of social inequality, and economic growth. Example on the general welfare is the cigarette. We have this what we call sin taxes or the non-essential goods such as cigarettes and alcohols. That is why it is expensive because this has sin taxes. Why is that it has sin taxes? To promote general welfare or to promote health. Because if they will not add additional taxes and cigarettes and alcohols are affordable, people can buy it easily. We all know that cigarettes and alcohols are not good for our health. That's why they added taxes so that people can reduce their vices. So that is regulatory purpose.
Two aspects of taxation. First is levy. Levy is the legislative act of composing the tax exercised by Congress. Levies are the legal means by which a taxing authority or a bank can seize property for the payment of a debt. Properties that can be seized in a levy are both real, such as cash, cars, and houses, as well as intangible and held by someone else like future wages. A levy is different from a lien because a levy takes the property to satisfy the tax debt, whereas a lien is a claim used as security for the tax debt. So how does a levy works? Levies can be exercised by either a tax authority such as a state treasury or the Internal Revenue Service or IRS or a bank. A levy is different from a lien because a levy takes the property to satisfy the tax debt, whereas a lien is a claim used as security for the tax debt. In other words, while a lien secures the government's interest or claim to an individual's or business's property when the tax debt remains unpaid, a levy actually permits the government to seize and sell the property for a tax debt. Collection is the administrative act of collecting the tax. This means that if you don't pay your tax in full when you file your tax return, you'll receive a bill for the amount you owe. This bill starts the collection process, which continues until your account is satisfied or until the IRS may no longer legally collect the tax. For example, when the time or period for collection expires. This exercise by executive branch with Bureau of Internal Revenue, Bureau of Customs, local government units, and appropriate government agencies.
Essential characteristics of a tax. First is enforced contribution. A tax is not a voluntary payment or donation, and its imposition is in no way dependent upon the will or assent, open or implied, of a person's tax. To be sure, taxation without representation or without the consent in some form of those who are to be taxed is contrary to the fundamental principles of good government. Second one is payable in the form of money. Unless qualified by law, the term taxes or tax is usually understood to be a pecuniary burden, an exaction to be discharged alone in the form of money, which must be in legal tender. Third one is laid by the state which has the jurisdiction or control over the subject to be taxed. A tax is laid by some rule of apportionment, according which person share the public burden. It is ordinarily based on the ability to pay. Thus, in practice, some people pay very high taxes, others very small amounts or none at all. Fourth is levied on person's property, acts, privileges, or transactions. In each case, however, it is only a person who pays the tax. The property is resorted to for the purpose of ascertaining the amount of tax that must be paid and of enforcing payment in case default of the taxpayer. But not all who pays a tax shoulder the burden of the tax. Fifth is levied by the state, which has jurisdiction or control over the subject to be taxed. The object to be taxed must be subject to the jurisdiction of taxing state. This is necessary in order that the tax can be enforced. Although a state can tax all persons subject to its jurisdiction for all their property left by them within its jurisdiction to seize upon person or property for purposes of taxation. 6 is levied by lawmaking body of state. The person to tax is legislative power which under the Constitution only Congress can exercise through the enactment of tax statutes. Accordingly, the obligation of a tax is its statutory liability. Last one is levied for public purpose. Taxation involves and a tax constitutes as charge or burden imposed to government, the administration of the law, or the payment of the public expenses. Revenues derived from taxes cannot be used for purely private purposes, or for the exclusive benefits of private persons. The public purpose or purposes of the imposition is implied in the levy of the tax.
There are three basic principles of a sound tax system. First is the fiscal adequacy. In here, it simply means that in order to sustain and fulfill the public needs, the sources of revenue should be enough to support different projects for the public sectors like in education, economy, and anything like that. It is to ensure that monetary collections, or the taxes rather, should be able to increase or contract annually in response to changes of public sector's expenses. However, inequality of theoretical justice, which is the second basic element of a sound tax system, it appears to hold that each and every individual has equal privilege to basic liberties, and that they should have the same and fair opportunities as other people of comparable ability. For example, in imposing tax. The idea is that people, business entities, and corporations with higher incomes should pay more taxes than those with lower income in their respective jobs. In simple terms, the act of paying tax should be dependent on the level of burden that the tax will create relative to the wealth of an individual. Lastly is the administrative feasibility. It means that the tax laws, the rules and regulations must be capable of being administered and complied with. Moreover, taxation should be vivid to the taxpayer to fully comprehend, capable of efficient compliance by the government officials, and easy in terms of time, location, and mode of payment. It tries to convey that the tax laws should be free from confusion and uncertainty for the constituents.
At this juncture, we will be dealing with the nature of the power of taxation. As what you can see in the slide, one nature is that the power of taxation is inherent in sovereignty, being essential to the existence of every government. Let us define first what is sovereignty. Sovereignty is a supreme power or authority to govern, rule, or lead a state, society, and a country. For example, is the power of a king to order his dominions to do a certain task. So going back to the statement, meaning that taxation is a natural or important part of a sovereignty. It is common for a sovereign or ruler to impose taxation as it is essential to every government because taxes allows a government to create projects such as building infrastructure and making programs. So the second nature of the power of taxation is, it is essentially a legislative function. So why it is said that it is essentially a legislative function? The reason is, in legislative, they have the power to pass laws and resolution, also establishing the government's budget and etc. With that, taxation plays an essential role as it serves as the basis whether a law is possible to make and to budget the government funds accurate and right. And lastly, moving on to the last nature of the power of taxation is it is subject to constitutional and inherent limitation. The power of taxation also possesses limitations. There are certain circumstances or situations that taxation cannot reach. For example, in constitutional limitation is an exemption of all revenues and assets of non-profit educational institutions, while on inherent limitations, the property of a foreign state may not be taxed by another. Take note that constitutional limitations are those presented in the Constitution, and inherent limitations are those existing independent outside the Constitution.
The three constitutional limitations. Due process clause. Taxpayer may not be deprived of life, liberty, or property without due process of law. Halimbawa, talo ka sa Bureau of Internal Revenue. So meron tayong right na evaluate yun sa higher authority like the Court of Tax Appeals. Pag talo pa din doon, either na ang talo man ay si taxpayer or si Bureau of Internal Revenue. Halimbawa, pwede po silang umapila sa higher at that is the Supreme Court. Hanggang sa maubos ng lahat ng pwede nilang gawin at doon pa lang magkakaroon ng finality. Equal Protection Clause. Taxpayers shall be treated alike under similar circumstances and conditions, both privilege and liabilities imposed. For example, kung ano man ang tax sa GM, ganon din ang tax si Florencio. At kung ano man ang tax sa Yuya, ganon din ang tax sa Jane. Tsaka di pwedeng di equal yung treatment. Uniformity Clause. Taxable articles or property of the same class shall be taxed at the same rate. No direct double taxation. For example, uniform. So, ibig sabihin kung si JM ay minimum wage earner exempt at si Florencio ay minimum wage earner din, exempt din siya. Kasi pareho silang minimum wage earner. Kung same classification, uniform dapat. Paano kung si Bantay Bata exempt? E di dapat exempt din yung ibang non-stock, non-profit organization or for charity na institution.
Now let's talk about direct double taxation. Direct double taxation occurs when the same public authority imposes two or more taxes on the same property for the same purpose during the same taxing period. Ang direct double taxation is when you pay income taxes twice on the same source of income. In the case of businesses, ang direct double taxation ay nangangahulugang ang isang korporasyon ay nabubuwisan sa parehong antas ng personal at negosyo. And now let's proceed about the limitations implied from Constitution. First is the limitation on public purpose. It is an essential characteristic of the power of the taxation that the tax is imposed is for public purpose and not for a private purpose. Ito dapat ay sa governmental purpose, sa public welfare, or common good. Next is the non-delegation of the legislative power of taxation. As in nature of the power of taxation, it is legislative in character. That power cannot be delegated to others. This is when states grants taxing power to another agency. Then that is a violation of the inherent limitation. Next is the International Committee. The power of taxation is imposed only within the state. The state could not tax another sovereign under the principle of international law of which we adhere. This is on the basis of Article 2, Section 2. The last one is the exemption of government agencies, wherein the government agencies immunity from tax. This is a self-imposed practical limitation that the government does not tax itself. The government exercising governmental or sovereign function is not taxed, but when the government agency exercises proprietary function, taxation is the rule.
Classification of taxes. Number 1. As to subject matter or subject. Personal poll or capitation. Fixed amount imposed on individuals residing within a specified territory. Property, real or personal. This tax means that there is a fixed amount upon all persons residing within a specified territory with no regards to their property or occupation. Example here is the residence tax or the property tax. This tax refers to one assessed on all property located within a certain territory on a specified date or in proportion to its value. For example, the real estate tax or the excise tax. This tax embraces any form of burden not laid directly upon person or property. For example, the value-added tax or the VAT. VAT is a form of sales tax. It is an indirect tax levied upon the consumption of the sale of goods and services and on the imports of goods into the country.
On the other hand, in the second classification of tax, the tax rate is determined by the supply and demand market elasticity, which usually compose of two different types of taxes. Indirect taxes, such as the income tax, they are paid directly to the taxing authority or the government by a person responsible for paying that certain amount of tax. The quantity of liabilities would be determined by the property or business performance over a period of time and appropriate tax rates. In indirect tax, these are taxes collected by an intermediary, such as a retail store, from a person who bears the ultimate economic burden of the tax. These are the taxes that can be transferred onto a different agency or individual. Typically, they are levied on a producer or retailer who then passes the tax on the customer.
The third classification of taxes is as to determination of amount. A specific tax of a fixed amount is imposed by number or by some standard of weight. Meaning, in determining the amount of taxes to be paid, it is based on the measurement or value of the property and transaction or service, such as the land, different businesses, and many more. Ad valorem tax is an example of tax that is based on the value of transaction or property rather than measurement or weight.
The fourth classification of taxes is income tax. This is a type of tax that government impose on income generated by businesses and individuals within their jurisdiction. Income tax is used to fund public services, pay government obligations, and provide goods for citizens.
The fifth classification of taxes is as to authority imposing the tax. First is the national or state tax. The tax is allocated to the national budget and set at identical rates nationwide, while local or municipal tax determined by the commune where established.
Number 6. As to gradation or rate. Proportional taxes. This is a tax that remains constant as a proportion of income as incomes increase. A direct tax on income may be a flat tax. For example, households pay 15% of their income in tax. Regardless of income level, proportional taxes do nothing to promote income equality but won't worsen it. Progressive or graduated tax. This is a tax that increases as a percentage of total income as income increases. The more you make, the more higher your tax percentage is. 40,000 pesos pay 25% tax. 100,000 pesos pay 40,000% tax. Progressive taxes promote greater income equality. Those who can afford to pay the most do. Those whose incomes are lower and cannot afford to pay as much pay less. Leaving poorer households with more disposable income to enable a higher standard of living.
In here, the place of taxation has two different concepts, namely the factors and the basis of it. Under the factors of the place of taxation, it includes the nature of the tax, which commonly focuses on the liabilities of an individual, such as lands or any properties at that. Next is the different impacts that could affect the state and the taxpayer, whether it will bring a positive or negative impacts for all its constituents, and can help both the economy and the public demands. Next is the domicile, which refers to the place where the person permanently living in. Fourth one is the citizenship and the source of income. It was stated here that a state's taxing power does not extend beyond its territorial limits. It simply means that the established doctrine says that no state can tax anything that is not under its jurisdiction, without violating the Constitution's due process provision. And if a salary is taxable, the beneficiary must have a residence in the country, or the property or the company from which the income is produced must be located in the state in order for the income to be considered to have a situs there. Personal wealth can be separated from its holder too, and he can be taxed on its account in the location where the site is situated, even though it is not his domicile and he is not a citizen or resident of the state imposing the tax. On the other hand, there are two bases of taxation. First, tax can be imposed to an individual if he is a citizen of the country, so that it will be considered that he is a valid recipient or beneficiary of the income. However, the income will also be derived or came from a certain source within the country he is residing in. It is because that the income tax is founded on the protection afforded by the state of the beneficiary. Lastly, taxation and social welfare are interconnected to each other's idea, which is commonly referred to as inclusive growth. Based on the definition, inclusive growth is a philosophy that promotes equal opportunities for economic stakeholders as a result of economic growth, with benefits accruing to all members of the society. In order to be described as inclusive growth, macroeconomic and microeconomic determinants of the economy must be linked directly to the economic growth of a country. That's all about the concept of taxation. Thank you and mabuhay!